And welcome to Inside India. I'm JP Ong. Here are your headlines. Asian markets are taking it on the chin today with valuation concerns hitting tech stocks. The Nikkei and the Kospi are leading losses this midweek. Indian auto giant Mahindra, though, posting a jump in quarterly earnings as its SUVs and tractors continue to make inroads. And Forex costs hitting Indigo's bottom line. The budget carrier's quarterly losses are widening, but it's confident about rising demand or growing demand in its second half. And good morning. We take a look at how Asian markets are starting off the Wednesday session, and don't blink because it is looking quite brutal. A terrible sell-off really hitting major indices in today's session. As we mentioned earlier at the top of the show, the Nikkei in Japan and the South Korean Kospi both leading losses. Take a look at the Kospi now, falling by about 3.5%, while the Nikkei 225, which is also on a lunch break, down by about 4.7%. And no guess again as to who's leading who's leading the downturn. It's a terrible tumble for tech shares that are really pulling on most indices across the region, with the Hang Seng also down by about 1% in Hong Kong. Not as bad as the others, but again, really seeing tremendous pullbacks, that is, or plunges for the Nikkei 225 and the Kospi. As you mentioned, we also look at AI stocks, which are down sharply today. Take a gander at SoftBank, tumbling 4% going into the Tokyo lunch break, or while it's in the lunch break, wiping out $32 billion in market cap. We'll watch for how the stock does when Japan markets resume trade in about 20 minutes from now. SK Hynix shares are also extending losses, and we take a look at where the memory chip maker is now, finding its footing, but still down by more than 3%. This follows a 5% decline on Tuesday after the South Korean regulator warned that the stock may be overheated. The shares had rallied about 11% on Monday and had been up about 200% year to date. The rest of the semiconductor space in South Korea also down sharply. Again, taking a quick snapshot of Samsung Electronics, also falling by about 4.5% today. Hanmi Semiconductors, though, plunging by 5%, and SK Square also in the red, firmly down by more than 6% in the morning session out in Seoul. And that's really weighing heavily on the Kospi today. And again, just taking a look at where the Kospi is, down by 3.4%. Again, worth reminding that a lot of this also on the back of some of the valuation concerns, and also some of the headwinds and concerns and the risk-off sentiment that's emanating from Wall Street after the warnings of perhaps overheated markets that are coming from some of the notable investors out stateside. Meantime, the White House says President Donald Trump remains in regular contact with Indian Prime Minister Narendra Modi, and trade talks are making progress.
I think he feels very positive and strongly about it. As you know, he recently, a few weeks back, spoke to Prime Minister directly when he celebrated in the Oval Office Diwali with many high-ranking Indian American officials here at the White House. We have a great U.S. ambassador to India in Mr. Sergio Gore, who will represent our country very well. And the president and his trade team continue to be in very serious discussions with India with respect to that topic. So I know the president has great respect for Prime Minister Modi, and they speak pretty frequently.
And this comes after President Trump, during his South Korea visit, signaled a thaw in strained ties. Trump had said he wants to reach a deal with India after months of strained ties following U.S. tariffs on Indian imports and sanctions that pushed India to cut Russian oil purchases. And while the focus is on India-U.S. tariffs, a senior team of EU negotiators are now on day 3 of a 5-day trip to New Delhi to hash out the finer points of an India-EU free trade agreement. The FTA is expected to be finalized in December, with India's Commerce Minister Piyush Goyal meeting with the EU's commissioners for trade and agriculture, with both sides looking for mutually beneficial outcomes. It follows Goyal's meetings in Brussels last week. Issues which needed to be ironed out include Indian exports of steel, aluminum, and cement to the EU. The EU wants duty cuts in automobiles and medical devices, among other products. And right, the Indian markets are actually closed for a holiday day, but we're still tracking the Indian rupee and currency markets, with the rupee right now, again, just trying to find its footing after starting off Wednesday on the back foot. It's now at 88.67 in today's session. But keep in mind, the last 2 days, we've seen some signs, perhaps, of the currency markets strengthening or really rebounding after nearly touching record lows. And again, perhaps hinting at potential intervention from monetary regulators that are trying to make sure volatility doesn't run too wild on the Indian rupee. And currently, we are seeing it trade at about 88.67 against the greenback. India's national stock exchange is moving in a step closer to its much-anticipated IPO. India's largest bourse has set aside about $148 million to settle cases with the market regulator SEBI that have delayed its listing since 2016. The disputes date back to a 2019 penalty over alleged unfair trading access. NSE also reported a 33% drop in Q2 profit as trading volumes cooled. Transaction revenue slipped 12% quarter on quarter, with SEBI's recent curbs slowing the derivatives frenzy. Average daily equity options premium volumes were down about 16%. India's market regulator SEBI has also approved the IPOs of 7 other companies, including SoftBank Bank e-commerce firm Meesho and Temasek-backed e-commerce logistics platform ShipRocket. Meesho is planning to raise $484 million with the sale of equity shares of some of its early investors, including Elevation, Peak 15, Venture Highway, and Y Combinator. ShipRocket, meanwhile, is planning a $300 million IPO, both companies filing confidentially with SEBI and expected to submit an updated draft red herring prospectus in the coming weeks. Now, we are still in the thick of earnings season out in India, and Mahindra is driving in a strong set of Q2 numbers. The car maker reported an 18% jump in profit to about $514 million, powered by steady demand for its high-margin SUVs and tractors, and also stronger exports. Mahindra, which holds around 23% of India's SUV market, saw domestic SUV sales rise 7%, while overseas sales of models like the XUV 700 and XUV 300 surged 40%. Its farm equipment business also delivered a standout quarter, with revenue up over 31% on the back of strong rural sentiment and a 32% rise in tractor sales. And the Indian auto sector broadly witnessed cheers to this festive season. Industry estimates indicate that Indians purchased around 470,000 vehicles in the month of October, marking a 17% increase compared to the same period last year. While the two-wheeler industry saw only a 2% rise in sales, some car makers credit the surge in demand to the recent GST reforms introduced by the government, with industry leaders Maruti Suzuki, Tata Motors, and Mahindra top of the list in recording growth with regards to sales growth, that is. We're now joined by Puneet Gupta, who's the director at S&P Global, to help us take stock of the recent festive season and the recent resurgence of car sales out in the subcontinent, and whether or not this actually has legs or perhaps some juice actually to keep moving forward. Puneet, thank you so much for joining us today. I do want to talk first, before we go into the festive season, about the September quarter, because we're seeing reports there of commercial vehicle sales picking up by about 12%. And it's important to note that this is before the impact of the GST festive season in late September. What was driving seeming optimism for the car segment even before the GST reforms kicked in?
Yeah. Very good morning, and thank you for inviting me. So I think it's very clear that today auto industry is in full throttle, and I think you saw in October, India crossed a landmark number of 500,000 units, which was retails, so close to a growth of 17%. So I think before GST, obviously, I think after 15th August, if I say, our Prime Minister announced that there will be cut in, GST, and by that time, I think industry was getting, there was a kind of, standstill in the demand, because everybody wanted to buy cars or vehicles at the new price, at the new tax rates, which obviously would be lower. So in August and September, we saw, clearly customers waiting, for 22nd September when the GST cut was announced. And even before also, I think we have been seeing, that because of regulations, the car prices have really gone up in last few years, and since India is a very price sensitive market. So obviously the affordability was impacted, in a big way. But now, with the GST cut, we have started seeing things coming back. And as I said, and primarily in October, right? So the powerful trifecta for wedding season, GST cut, and festive season, So all of this led to a sparkling growth, in the auto sector across the categories.
So, Puneet, let's go from the seasonal aspects of these car sales to the geographical aspect of these car sales, and specifically in regards to the difference between urban and rural demand. Is there anything we should take note of when it comes to trends with regards to sales growth when it comes to the urban markets and the rural markets in India?
Yes. So I think if we see, typically, I think we have, just 1.5 months to talk about after September 22. But, if you see the rural markets in the PV segment have, really reverted back, and we are seeing the growth in that segment. And that's very clear, because once you have 10 to 12% cut, in terms of small cars, so that really, makes primarily the first time buyers really get into, buying cars. So I think primarily in India, the car penetration is just 36 per thousand. And in last few years, we have seen that first time buyers was really not getting into the orbit of car sales. But now, the fence sitters and with the cars becoming more affordable, I think it's clear that we have seen that jump. And in rural India, typically in car sales, we are seeing things are moving good. So obviously urban India was always good because replacement demand was obviously a good driver, and that's how we see the sales of mid-size cars or SUVs, really going good. But I think with the rural segment joining in the urban India, so clearly India may be looking forward to a record sales, not only in this quarter, but coming quarters in 2026 also.
Okay, and a lot of this also tied on the fact that there was that 1-2 punch, timing the GST reforms or the GST cuts around the festive season that really turbocharged these sales numbers as we see. My question, though, Puneet, is this sustainable, or could this just be a one-off that sees a one-off boost with regards to sales and then a quick reversion back to the mean?
No. So yeah, so in S&P, we have revised our 2026 calendar year numbers, and we are really looking, as I said, cars have become affordable, and India, penetration levels are really too less. So we are really looking for a good story, for 2026. And, clearly there is a lot of optimism in the country. And it is not just only the car price cuts, because if you see, because of GST, the spending, there is a saving element, which have increased for every consumer, right? So direct as well as indirect. So there is a positive impact on car sales. But now, considering that, in 2027, we have CAFE 3 norms kicking in. So because of which, we may see price increases, towards the last maybe towards the end of 2026. But we have full year 2026, where we will see the auto industry really in full drive, and we have started seeing that from last month itself, when we are seeing that the inquiries, the demand is really outpacing the old benchmarks.
All right. Puneet, okay, so it seems that on the sales front, there's a lot of upside with regards to a revival in Indian auto sales. But could this also translate towards Indian auto manufacturing? And I ask that because manufacturing as a whole across the world has been put on notice because of a lot of the supply chain dislocations and some of the tariff concerns that have been unleashed in the last couple of months. Net, what is the outlook now for Indian automotive manufacturing when you take into account the opportunities by growing sales, and also some of the supply chain issues that we've seen really come to fore over the last couple of months?
Right. So today, India is at a very interesting junction. On one side, our auto industry is growing, and since India is signing a lot of FTAs, so that's really going to help the supplier sector also. So we may see and a lot of suppliers, and basically Indian government has been pretty proactive in terms of offering PLI schemes. So I think all in all, it's going to be a big boon because FTA means maybe more exports of parts from India, and then our domestic market itself is doing good. And if you see the PMI index of S&P Global, I think India clearly in last few months the PMI have touched around 65, which is the highest ever in last almost around 2 years, right? So clearly when PMI is above 60, it reflects that your manufacturing is booming, and auto industry itself is booming. And as India grows, as India GDP per capita have crossed the inflection point of $2,500, per capita. So clearly, this is the inflection point for any country. And as India grows, as India economy grows, the need to mobility will increase, and that is how we see, which is in conjunction that, overall, the auto industry is going to be the net beneficiary, and GST cut coming at a perfect time is further going to be a big boon for the industry in at least in coming year.
What about currency weakness? Because whenever we look at consumer confidence and consumer appetites, we also look sometimes at the strength, at the state of the currency. And perhaps you've also been aware of the fact that the rupee has been flirting with some of their weakest levels on record. Is there a point where currency weakness might actually start to dent appetites for some of these discretionaries like autos?
Yes. Obviously, I think in last point also we were touching. So there is no doubt that currency devaluation will dent the margins. But parallelly, I think this will be outpaced by the growth what we will be seeing in the industry. And already OEMs have a cushion of big GST cut, which has happened, and which is quite substantial, which is almost 10 to 12% for car manufacturers. But then what makes us worry is obviously global crisis, because domestically India looks very strong, but when you come to Nexperia crisis, or when you come to the global economic or global political scenario, then obviously that is something which needs to be watched out very carefully, because today obviously India is a domestic market, big domestic market, but it is not isolated. It is very much connected to the world also. So that can be that can impact the industry, but that comes as a risk factor later. But overall we see clearly India in full optimism today.
All right, but we haven't even touched actually on electric vehicle sales in India. And based on recent sales reports, we've seen that there's been an uptick, at least with regards to sales of electric cars. But again, a long way to go before they can actually be considered side by side with conventional vehicles. What stood out for you with regards to the recent EV sales trends that we've seen over the last couple of months?
Yeah. So I think if you see one S&P study, so it is a very clear number, that 4% is an inflection point for BEV penetration in any country across the world. So you may take Norway way back in 2012-13, you may take China in 2019. When any country touches 4% EV penetration, that is the time when EV starts jumping. And in India, if you see last 6 months, the EV penetration in cars has been around 4%, so this is generally an inflection point, which I said, and from here on, the EV sales start jumping in, because you have more models on the road, because you may have a little better charging infra, the consumer confidence is increasing, you may have a better supply network to supply EVs components, so overall we see, this is an inflection point, and India has touched this. But clearly, India is a diverse country with diverse needs, diverse pocket size. So India government is putting a lot of focus on a multi-fuel strategy, so clearly if you see, we are not just banking on electrics, we are banking on CNG, we are banking on ethanol, flex fuels, hybrids, and maybe plug-in hybrids going forward. And clearly, because India wants to be a self-reliance, reduce their reliance on other big markets, right? So clearly, multi-fuel strategy works pretty well for India, and considering seeing the demographics and the need of the consumer. So I think all in all, EVs are going up, and considering the energy security challenge, the pollution in the country, electrification is the only choice in the country today. And in four-wheelers we have started seeing it catching up. But then one important fact is that with the recent GST cut, the price parity between electric vehicles and ICE have got tilted in favor of ICE or hybrids. So that can be a little setback for EV players, but overall, I think it is the aspirational consumer, and as we see more investments in EVs in terms of new models or better charging infra, EV is bound to grow. And even in two-wheelers also, we have started seeing that the main players like Bajaj, TVS, they have now jumped into this EV foray. So clearly, this will grow, but parallelly, we have like rare earth magnet crisis. There are technology transfer issues going on. So obviously, these are the bottlenecks, to the growth of EV industry in India for now. So India will grow, but at a slower pace, than what the world is growing in EVs.
All right. Puneet Gupta from S&P Global, we thank you so much for taking some time out of your schedule to join us today on Inside India to help us make better sense of the trend, the growth trends that is within the Indian auto sector and how recent GST reforms might have actually impacted that. We thank you so much for your insight, sir. It's been very helpful actually for us. Before we head to a break, a quick check on cryptocurrencies now, and you can see here that again, the downturn, the tumble from the crypto space continues, either down by 7.8%, and Bitcoin also in the red, plunging 4.5%. Inside India will be back in about 2 minutes with more. Stay tuned. Welcome back. You are watching Inside India, and here are some of the stories we're keeping tabs on. Democrat candidate Zoran Mamdani has won the New York City mayoral elections. The 34-year-old has become the city's first Muslim mayor. Trump had endorsed his opponent Andrew Cuomo, a Democrat who ran as an independent after losing in the primary. Trump also threatened to withhold federal funds from New York City if Mamdani wins. Another Democrat, Mikey Sherrill in New Jersey, winning the governor race, while Democrat Abigail Spanberger won in Virginia, flipping the seat. Former U.S. Vice President Dick Cheney has also died at the age of 84. Cheney was a central figure in the Bush administration, helping drive the invasion of Iraq and the war on terror. He is widely regarded as one of the most powerful and polarizing vice presidents in American history. The White House lowered flags on Tuesday morning, but made no formal announcement. Cheney had been a longtime critic of Donald Trump, calling him the greatest threat to America's republic. And the U.S. government shutdown is on track to become the longest in its history. as it enters its 36th day at Eastern midnight. A Republican-backed stopgap funding measure failed again on Tuesday. Tens of millions of Americans remain without benefits under the SNAP benefit, and President Trump has ordered those funds to be withheld until the shutdown is over. U.S. Treasury Secretary Scott Bessent addressed the ongoing gridlock in an interview with CNBC this morning. Take a listen.
Reopen the government and then the talks can start. And you know, the crazy thing is they kept talking about a November 21st deadline, and you know, we're getting there, and they haven't reopened the government. So, and you know, we're starting to see this affect the economy. We're starting to see the airport delays and shutdowns, and I can tell you the American people are going to blame the Democrats if the busiest travel day of the year, the day after Thanksgiving, is a disaster. People aren't able to be with their families. They should be ashamed.
And now taking a look at how U.S. futures are shaping up before the open. Again, mind you, they're coming off that Wall Street sell-off. We'll see if things have actually improved as we wait for the futures board to actually come up. And again, also we mentioned a while ago, a tumble out on Wall Street for U.S. stocks that's influenced at least the sell-off we've seen out here in Asia. Well, here we are. We are still seeing that there's an implied open of implied declines, at least. Perhaps not as deep as we saw overnight, but the S&P 500 also looking to at least be open about 0.25% in the red. The Nasdaq again also down by about 0.4% based on this implied open. Again, perhaps a bit more of a shaky Wednesday, perhaps to brace for when markets out in New York open later on tonight. And a quick look now at how Asian markets are looking. Again, not much better, actually. And the sell-off continues for the major indices across Asia, the Asia-Pacific. From Tokyo to Taipei, from Seoul to Sydney, we are seeing that stocks are in the red. The Kospi, again, one of the notable laggards today, down by about 3.1%. And the Nikkei 225 also falling by about 4.7% so far in today's session. It's also extended to the likes of greater Chinese markets. Now, the Hang Seng Index is not seeing a stark of a loss, but they're down by about 0.6%, while the Shanghai Composite out in mainland China also about 1/5% in the red. It's also extended for other markets in Southeast Asia. Take a look at the Straits Times Index here in Singapore, falling by about 0.9%. And we're also seeing the Thai set today down by about 0.6%. Also, of course, also have to take note of the TAIEX in Taiwan, with a lot of tech plays also there, including the likes of TSMC, the TAIEX in Taipei also falling by about 1.4% in today's session. And overall, there is a bit of a risk-off sentiment out here in Asia after valuations in the equity markets globally were called into question by some of the leading CEOs of banks out in the United States, which resulted in that pullback in the U.S. and that's cascaded out here to the Asia-Pacific markets. We'll see if the sell-off will let up anytime soon, but it seems that Wednesday will be a day when markets hit a hump, actually. Coming up, we'll continue tracking the sell-off we're seeing in tech stocks across Asia today, and also check on the Nikkei as it comes back from a lunch break. Stay tuned. You're watching Inside India. Welcome back to Inside India, and we take another look at how Asian markets are tumbling in today's session. Again, the Nikkei 225 also coming back from their lunch break out in Tokyo. And again, no smiles for Japanese equity traders today, with the Nikkei 225 finding itself about 3.6% in the hole, arguably the biggest loser, actually, this hump day out in Asia. AI stocks are also down sharply. And take a look at SoftBank again, trading down by 11.6% in the red, a plunge for the tech investor out in Tokyo. SoftBank Group shares now at 22,195 yen, tumbling 40% after it went into the Tokyo lunch break. And currently it has wiped out about $32 billion in its market cap. Of course, SoftBank, a notable investor in a number of AI and chip makers, that's really helped it out. And it is down. It is paring back some of those losses, but SoftBank is still one of the leading laggards and one of the biggest drags for the Nikkei 225 and the broader topics. Other tech stocks now, if you're not sheepish, taking a look at how some of the chip plays out in Japan are faring today. Take a look at Advantest, also falling by about 7.4% in today's session. In Tokyo Electron, the chip equipment maker, also down about 6.2% after valuations for tech and chip stocks have been called into question by certain investors out on Wall Street. A lot of heavy selling pressure making itself felt in the chip space out in Japan so far. Now, a quick check also on oil markets. Global oil markets are under some pressure overnight on slight market concerns of an oversupply. And right now we're seeing that WTI and Brent crude are both down by about 0.3% each, with Brent crude now trading at about $64.27 a barrel. OPEC Plus did signal its decision to scale back its returning of global supply to the markets. CNBC's Dan Murphy sat down with OPEC's Secretary General Haitham Al-Ghais and asked him about that decision and the overall demand expectations.
The feedback I've been hearing from people in the market is that it's a very wise decision, a very well structured decision based on fundamentals of the market. And this is what we always do. I mean, our ministers meet on a monthly basis in the group of 8 countries that have taken on their shoulders the burden of those additional voluntary adjustments in the past, which are now being gradually returned to the market as the market requires additional volumes. Therefore, when we look at the fundamentals, we see oil demand growing at 1.3 million barrels a day. Yes, there are people there who think our number is too high, but I'm going to go back and say I think their numbers are too low. And I think the market is proving that there is a requirement, and the market has absorbed the barrels that we have been replenishing or returning to the market very nicely over the past 6 to 9 months. So the decision was basically to reflect the seasonal slowdown, I would say, in intake of crude because of the maintenance that happens gradual. You know, there's a big global maintenance in refining for turnarounds and maintenance that happens every year in Q1. So the decision was aligned with that situation, which is nothing out of the norm. Anybody who follows the oil markets would be definitely comfortable with such a move. I think it's a wise decision, and it's been taken very nicely and well by everyone.
Well, this is also seasonality as well, right? Because this is a similar pause that the group took at the start of this year.
Correct. Yes, the seasonality is part of this phenomenon that I explained, where we have the maintenance. And you're right, in Q4 and Q1, usually demand does kind of slow down, and we have an uptick in Q2 and Q3 every year. Yes, the seasonality element.
What did you make of the market reaction? We still see oil prices holding at around this $60 a barrel handle. I know you don't specifically move the price or track what's happening with prices, but walk me through the market reaction. What do you think investors are responding to?
Well, what I'm hearing is that everybody is really happy about the decision, and that the decision was a well thought out decision through a well thought out process and reflecting the seasonality as we discussed. And there are many fundamental factors and non-fundamental factors that impact the price. We don't get involved with the discussion about what price levels. I mean, the market really sets the price ultimately. There are narratives out there talking about a supply glut. They've been talking about it for the last 2-3 months, trying to push that narrative of a glut in some media circles and so forth. And we don't see that glut, Then it's become about oil on water and the volumes coming out about oil on water, and then adjustments of oil on water. So I think there's a lot at play there that has been tampering with the prices, if I may use that term.
Well, coming up, a raft of Q2 earnings to digest, We'll talk about numbers from State Bank of India, Adani Enterprises, and Indigo, and also a conversation with healthcare solutions and service provider Sagility. After this short break, we're back in about 2 minutes. Welcome back to Inside India. Now, Indian markets may be offline for a holiday with regards to the equity markets, but the rupee keeps on rolling. A quick check of how the Indian local currency is trading, and you're seeing just a slight softening bias, that is, if I call it that, for the Indian rupee. Now at 88, it's spot 73 against the US dollar. The last couple of days have been quite momentous for the Indian rupee, actually, after it flirted once again with some of its weakest levels on record, and the sharp pullbacks with signs of potential intervention from monetary authorities trying to smoothen the volatility from running wild. Well, on to some earnings now. State Bank of India has reported a 10% jump in quarterly profit to about $2.3 billion for its September quarter. This was helped by gains from its Yes Bank stake sale. Net interest income rose 3.3%, and net interest margins improved sequentially to about 3.09%. SBI's gross advances grew 12.7%, while deposits were up 9.3%. The biggest lender of India has raised its loan growth target for the year from about 11% to 12 to 14%, citing stronger credit demand. Adani Enterprises reported an 84% jump in quarterly profit due to the sale of its stake in its agribusiness and gains from reorganizing its cements units. Revenues fell 6%, while also announcing plans to raise $2.8 billion through a rights issue as it tries to move past setbacks from the last few years. It could be one of the largest equity fundraising plans in India this year. The last time it announced an equity fundraise, the funds were returned to investors after US-based short seller Hindenburg Research accused the group of corporate governance issues and stock price manipulation. And meanwhile, India's biggest airline by market share, Indigo, also reported Q2 numbers. And CNBC's Monica Petrelli joins us now to break down that report card. So, Monica, talk to us about how Indigo actually did over its last fiscal quarter, and whether there's reason to be hopeful or reason to be perhaps concerned.
Well, it depends on how you view this, but the street was expecting a loss from Indigo, but not the nearly $26 billion loss that was announced yesterday evening. This equates to more than $290 million US dollars. Now, much of this owing to foreign currency fluctuations and costs and movements, both because of the decline in the rupee compared to the US dollar, but also because of Indigo's US dollar denominated expenses, including its lease expenses. Now, overall, expenses for the company jumping 18% year on year. That's despite fuel costs dropping. This mostly wiped out by increases in maintenance and airport fees. Now, despite this, executives on a conference call last night very much wanting to talk about other metrics, showing that the company is still in sound financial operations. Operational revenue grew by 9.3%, beating expectations. That's year on year. That's during a seasonally weak period for India. The summer, what we traditionally think of as the summer, is really a period of heavy rain. Liquidity up, passengers up 4%. Also now, Indigo now serving 94 destinations within India, but the next frontier, according to CEO Peter Elbers, is really the international expansion. We saw talk of flights resuming to China, but a lot more conversations surrounded Indigo's push into Europe. It's now flying wide bodies into Manchester, Copenhagen, Amsterdam, as well as Heathrow. We're also seeing the company increasing full-year guidance for capacity, saying most of this will go into international routes. This will further its long-term goals to become not just a domestic carrier for India, but an international global airline. But it will also help to offset some of those currency fluctuations in the future, as international revenue will bring in much-needed U.S. dollars.
Now, I am curious, though, because whenever we talk about the airline space in India over the last couple of months, there's also always that geopolitical change, especially with tensions rising once again with their neighbor Pakistan. Has this actually affected the numbers or played a part in affecting their recent scorecard, Monica?
Yeah, executives talking about that in the call last night, saying much of this stabilized in July. It helped August and September numbers. That said, though, it has been a difficult year, not just for Indigo, but also Indian aviation as a whole due to these matters, but also, of course, that tragic crash of Air India Flight 171 in June. Beyond that, though, Indigo really focusing on it's now still staying the course. It is expanding. In fact, one of the questions last night from one of the analysts saying, you know, really, is the capacity that you're expanding, is this based upon data? And the CEO, Elbers, saying, yes, I don't operate a business based upon quarterly. I am looking at the long-term growth model for India, which is still intact, still on pace, especially as some of those big infrastructure projects start to come on board in the next couple of years.
And as you know, Monica, it's not just how quickly you expand, but also the product you're offering, service. And I've noticed that there have been some new passenger-friendly rules that have been proposed for the aviation space in India. Can you tell us more about what these are and if it means that there will be a better flying experience for some of our friends in the subcontinent?
Yes, well, they are proposals now, so it's too early to celebrate. But I think passengers will be happy to see that at least civil aviation authorities are considering what's called look-in clauses, which gives you 48 hours to change or amend your flight without any price increases, assuming that the fares don't go up. But a bigger issue there is also that you can have 24 hours, so slightly less time, to change your name without any fees. Now, India culturally has some of the longest names in the world. You could, especially in the south, that extending down to Sri Lanka as well. So you could look no further than the cricketer star Tremendra Voss. He has a relatively short name. However, his full name, 61 characters long. So you could see how with a name that long that it would be easy to have a typo. So to have something there for passengers to be able to help not just the passengers, but the airlines too, because that just creates a customer service problem for everybody.
And really, that's a cultural nuance when it comes to the Indian aviation market. It's something that we're glad that at least the aviation authorities are pretty much aware of. Hopefully that means less headaches for Indians as the domestic market expands. Monica Petrelli, thank you so much for the latest with regards to Indigo and the aviation space out in India. Meantime, Novo Holdings, the controlling shareholder of obesity drug maker Novo Nordisk, is scaling up its India bet. The Danish investment firm is sharpening its focus on single specialty hospitals and contract drug manufacturers, calling them high-growth healthcare opportunities. Novo has increased its India deal size to about $50 to $125 million, up from a previous $20 to $30 million gauge earlier. And that has set up a dedicated Mumbai team to deepen its presence. It's eyeing investments in oncology, mother and child care, and nephrology centers, which it says mark the next phase of hospital care out in India. Healthcare solutions and service provider Sagility, which partners with several U.S.-based clients, saw its share price skyrocket by about 12%. This is after they reported a 25% increase in quarterly revenue and an impressive 84% rise in profits last week. The strong performance comes despite the lack of progress in the U.S.-India trade deal and the tariff threat on exports, including services being discussed in U.S. Congress. We're joined now by Ramesh Gopalan, who is the Group CEO and Managing Director at Sagility, to talk to us about some of these trends, some of these threats, and perhaps some of the future opportunities for the Indian healthcare BPO space. Ramesh, thank you so much for joining us today. But let's start off with a strong set of earnings. Now, we've talked about the fact that profits after tax rose by about 84% in the last quarter. Again, nothing to sneeze at. But perhaps even more interesting is that you've now slightly raised the outlook and have indicated the confidence. You have confidence that the momentum, the growth momentum for Sagility and the industry will continue. Can you talk to us about what's underpinning this confidence that you're seeing right now for your space and for your business?
Good morning. Thanks for having me on your show. Yes, we had a very strong H1, and that's what has given us the confidence to increase the guidance for the rest of the year, both on the top line as well as on the margins. First, talking about the top line, as you know, we serve the U.S. healthcare market, both payers, which is health insurance companies, and providers. And the core value proposition to our clients is how do we help them run their operations more efficiently, and how do we help them take cost out of their operations. As you know, the biggest challenge facing our clients in the U.S. today is profitability pressures. A lot of changes happening in the U.S. healthcare and still a lot of bills up for consideration, which is going to impact both the membership as well as our clients' profitability. So in that context, our clients are looking at service providers who can help them run their operations more efficiently. And that's where we come in. And so we are seeing an uptick in the interest from clients. We are partnering with a lot of our existing clients on larger deals where they want us to partner with them and help them take out cost and run operations a lot more efficiently. As regards margin, yes, we are just not a pure service provider, but we also bring in a lot of transformational capabilities. And all these capabilities, analytics, automation, AI, all of these, while they help bring value to our clients, they also help us stabilize and improve our margins. And that's what we are seeing on the margin front as well. So both on the revenue and the margin front, we are seeing on the back of the strong H1 performance, we've increased our guidance for the rest of the year.
And you talked about transformative factors. I do want to ask about how perhaps the business of healthcare BPOs has changed over the last couple of years, not just from technology, but perhaps from evolving demands from some of your clients in the United States. Can you talk to us about how different the business looks now as compared to, say, 5 to 10 years ago, based on the evolving trends with regards to demands and perhaps even technology?
Yeah, so we've been doing healthcare for 25 years, right? So one of the things that differentiates us from the rest of the market is our strong domain capability, right? So we go to market as healthcare experts, not just a pure play BPM provider, and that helps us in a big way because the complexity of U.S. healthcare is only increasing. Like I said, a lot of regulatory changes as well as healthcare costs going up year on year is putting a lot of pressure on our clients and their bottom lines. And so clients are no longer just looking at labor arbitrage or the benefits that they get by moving work to different lower cost geographies. But they're also looking at partners who can bring in technology, who can bring in transformation to take additional costs out of their system. And that's where a combination of domain expertise and transformational capabilities come into play. And so the conversations these days with clients is, say, look at my whole function, look at it end to end, tell me what are the transformation opportunities, and if you can commit to a cost takeout over the next 3 years, then we are willing to sign bigger deals and we're willing to partner in a much bigger way.
All right.
And that's the kind of change, to your point, and that's the kind of change that we are seeing a lot more in the last year or so.
Okay, so let's go into another transformative force that's been highlighted, and that's artificial intelligence. Now, some of the cynics would say that this is something that might be a death knell for BPOs, but some say that this will actually be very transformative for how BPOs operate. Regardless of where you sit, there is a need for BPOs, such as across the board, to sort of adapt or perhaps even make sure that they are empowered by AI. How is this changing the way Sagility does business, and how is Sagility making sure that AI empowers and doesn't extinguish the outlook for the company?
Look, first of all, I want to acknowledge that AI is going to be a very disruptive force, right? It's the way how you look at it. Rather than trying to be defensive about that, we at Sagility, we've taken it head on. And so we are incorporating a lot of AI in the operations that we do for our clients. To us, AI is going to cannibalize revenue, and we've openly acknowledged that. Going forward, we are going to see some portion of our revenue getting cannibalized because of AI. But on the other hand, it's going to open up more opportunities for us. Like I said, if a client wants us to take out costs in their operations, AI is a big lever in helping us do that. And in doing that, we are able to commit to clients a larger takeout of cost, and which means we are signing larger deals and getting a lot more transformational. And this also helps us open up newer markets in healthcare. So we are aggressively investing in AI. And to your point, yes, it is going to cannibalize revenue to some extent, but it's also going to help us grow much faster.
No, but a lot of the key here also, Ramesh, from some of our conversations is that it's how quickly the employees of these BPOs actually adapt to the impact of AI. How difficult is it right now? How challenging is it to making sure that your employees are upskilled to make sure that they can handle some of the changes or some of the uncertainties that AI is bringing out right now?
That's a good question, right? So we are spending a lot of time and effort in upskilling our employees. In fact, rather than just use AI for our clients' business, we are using AI in a big way, even in our internal operations, how we hire people, how we train them. And so AI today can help us personalize our training depending on the individual, right? So we can understand the needs of every individual, and we can personalize the training content. And the thing that we are always good at is, I mean, we operate for US healthcare clients from multiple geographies, which have very little understanding of the US healthcare market. And so our ability to hire graduates and train them and bring them up to speed has always been our core competency. And so even in the AI world, we are looking at ways on how to improve the capabilities of our employees to work with AI tools to generate those efficiencies that our clients demand.
All right, Ramesh, let's talk about some of the other, perhaps the headwinds that might be besetting the BPO space. And I think front of mind right now is the HIRE Act, which the former RBI Governor Raghuram Rajan actually said might be the bigger risk for India, especially if heavy taxes are levied on the likes of Sagility, on the likes of BPO, such as yourself, for instance. How closely are you monitoring these developments? Mind you, they're still being debated in U.S. Congress, but again, something that perhaps might need to be taken account of this early on. How closely are you watching for these, and are you starting to prepare contingencies if the worst does come to pass?
As you know, over the last 6 months, there have been a number of changes, and so we are constantly monitoring all of these changes. Yes, if it comes into law, there is likely to be an impact on us. But then you need to understand that the way we operate isn't going to fundamentally change. There might be some geographic shifts depending on what these tariffs are. And we also have a significant presence in the US market. We deliver for our clients from the US geography, and that is likely to increase if some of these legislations come to pass. But yeah, we are a global company. We operate out of 5 different geographies. And so we will look at these laws as they take effect and see how to redistribute our operations to make it more cost effective, both for our clients and for ourselves. But yes, it will definitely have an impact on our margins.
Ramesh, I just want to ask you one quick question here. I noticed in the results that you indicated the voluntary attrition rate at Sagility of about 26.3%. But I've looked at some reports that say that actually the average attrition rate for the Indian BPO space might be between 30 to 40%, which means you're actually doing better than most others. Why is the attrition rate so high? Is this because AI is starting to replace jobs, or is the BPO industry and the hunt for talent really that intense in the Indian BPO space right now, sir?
No, this attrition has been the norm for the last several years, right? Even before the advent of AI. In fact, if you look at our attrition rates, they've actually improved since the pandemic days. Today, we have a combination of work from office as well as work from home. And that's really helped us reduce our attrition rate. So you're right, our attrition is better than industry, but it is higher compared to some of the other industries. But that's always been the the norm in the BPM space. That's also because we hire a lot of freshers from college, and many of them in their first year or two decide whether this is a career that they want to pursue. Some of them go back for higher studies, and so all of these are reasons for attrition. But this has been the norm over the last several years.
All right, Ramesh Gopalan, CEO of First Agility, thank you so much for joining us today, for providing more insight and shedding more light on your recent earnings, why you're bullish with regards to the outlook for your industry, and what you make of some of the headwinds that might beset the Indian BPO space. Thank you so much, sir, for your time.
Thank you.
Well, some breaking news now from China. The Chinese Finance Ministry says the country will suspend their 24% U.S. tariffs for about a year. And they will also lift some tariffs on U.S. agricultural goods from November 10. Currently, we're seeing the Chinese markets starting to find their footing, perhaps one of the only shades of green right now across this broad sell-off across the Asia-Pacific markets. They're finding their footing so far today. Meanwhile, the yuan offshore is currently strengthening now and flexing a little bit, not by much, but at 7.13 against the U.S. dollar, it's looking a bit more confident as compared to its other peers. And again, Chinese markets perhaps one of the few bright spots or emerging bright spots against this broad sell-off that we're seeing hitting the Asia-Pacific markets this hump day. The Shanghai Composite now trading flat to the upside, just up by about 0.05% at 3,962 points. Well, that's all the time we have today on Inside India, but do keep watching CNBC. That's because Access Middle East is coming up next. Have a good morning.